Good afternoon, everybody. Welcome to another edition of Financial Friday. We are joined once again by Jeff Kennedy of the Kennedy Wealth Group, and today we're talking about what was a very busy roller coaster week on Wall Street. And Jeff, crazy week. What happened this week?
You're right. It is a bit crazy. Stocks closed their worst two-week slide since November with a sell-off late this afternoon as disappointing data about Chinese growth sparked more worries that the global recovery is faltering. The Dow Jones Industrial Average was off 137 points, or just over 1%, to end at 12,850. The S&P 500 index was down 1.25%, while the Nasdaq Composite was off nearly 1.5% itself. For the week, the Dow was down 1.6%, S&P down 2%, and the Nasdaq was off 2.2% for the week, which added to last week's losses during the holiday shortened week. So while volatility has been nearly non-existent in the first quarter of this year, it's reared its ugly head in a big way in the last couple of weeks.
Obviously, this is a lot of detail. Break it down for our viewers. What does this mean for them, bottom line?
Well, with volatility coming back, people become kind of like deer in the headlights. If they don't have a definitive plan that they know what to do, because the strategies they've been using have failed them, and they don't know what the alternatives are. They learned some lessons from the 80s and 90s and that great bull run, but those strategies have failed them in this sideways, very volatile market, and they need to change the way that they're doing they're investing for the long term.
And that kind of goes to some of the things that we've been talking about over the last few weeks, stable plans to really take care of your financial self now and into the future.
Right, having a plan and understanding why you own what you own, not just buying and holding something because that's what you've always done, and buying a mix of stocks and bonds and calling it diversified. Retail investors need to learn to invest like the big institutional investors, like Yale Endowment, for example, Yale University. The manager there has had 32 years where they've only had one down year, and the average rate of return over that time, 13%. Now, they don't invest like the average mom and pop. They have all these different alternatives that they use to get a truly diversified portfolio, and those are available today for small investors. People just don't realize it. Many brokers cut their teeth in the 80s and 90s and have certain strategies that they use then, and now these are available. People need to seek out these opportunities because they're there. You don't have to settle for poor rates of return and fixed products, or settle for the volatility that's been given them in the marketplace.
Now, if you're just getting into this and you've been hit by this week and it's kind of got you a little scared, how can you kind of recover and start to get yourself back on solid footing?
Right. If you don't know you're on a plan to do this, contact and get with a broker who does know. We can give you some information if you contact my office. We'll give you a report on this and ways you can do some research and find a way to do it. But don't be stuck like the deer in the headlights on the highway, because what happens to that deer, right? It gets hit. So you need to prepare yourself for that and move out of the way by using proper strategies. Invest some time in it. It does take a little bit of time to learn what these opportunities are, but do make that effort.
All right, Jeff, thank you so much. We are out of time. As always, it's great talking with you. Want to remind you guys once again that we post all of our interviews with Jeff on our KHQA YouTube page. You can check them out there. We will be back in just a few moments with another look at weather.